Hey everybody, I'm Brian Shannon from alphatrends.net. Today is Friday, the 16th of February, 2024. Before we look at those charts, let's take a look at the numbers for the week. It was a lot of red and green all over the place, a lot of volatility, and the warning signs keep piling up in this market that, speculative fever is getting a little bit high, volumes are running low, there's divergences all over the place, but prices for the most part continue higher. We did lose a little bit of ground in the S&P 500 and the Nasdaq as well as the semis, but biotechs and the Russell 2000 were higher, as well as financials, energy, led by oil up close to 12% on the week, and Bitcoin and Ethereum. Those cryptos continue to be strong after those breakouts. We'll talk about those. So starting with the S&P 500, we pulled back on the CPI report on Tuesday morning, touched that 20-day moving average, and when we look over here on the right on the 30-minute time frame, you can see it was also a 61.8% retracement of the low from right here up to there. So 61.8% as well as the 20-day moving average. Buyers stepped in after that. So what I did was put an anchor to that CPI report because that was clearly an important level that brought about a revaluation, rapid revaluation of stocks. So that's when we want to put a new anchor on. And what you'll see is on Wednesday, we pulled back almost precisely to it and then bounced. We got back above the 5-day moving average, and on the daily time frame, we continue to see the pattern here of bigger volume on that pullback right here on Tuesday, followed by lighter volume rally for the rest of the week. So which one's right? Well, I will tell you that, volume, especially in the markets in particular, the ETFs, it doesn't matter as much as it does for the individual stocks. But what's more important than being down on big volume and up on light volume is the average transaction price. And that's exactly what this anchored volume weighted average price tells us. It says from that point, when we gapped lower, did the buyers or sellers have gained control? Well, they gained control because we maintained above that volume weighted average price. The average price since the CPI was down here at 497.5. Here we are up at 499.5. So the buyers are in control. People who tried to short it and push this market down, we're fighting the primary trend over here on the daily time frame, and we're suffered losses. So the path of least resistance on the longer term time frame continues to be higher. Absolutely, we're extended. Yes, we're up on lighter volume. We're touching this trend line. Trend line breaks, remember, don't mean the trend is over. It means that the rate of ascent may have slowed. So if we see something like this, maybe we come down to the 50-day moving average and take some time to top out in here. There's nothing saying we have to make a top up in here. So it only ends badly, as I always like to say, for the people who don't have a plan. So have a plan. Be aware of the divergences. Be less aggressive with new stock positions. Look at the big stocks that are, starting to roll over and get, some of the speculation out of there, like SMCI. Blasted right through every level of potential support. And this stock is not likely to see the end of volatility. We're going to see a lot more volatility in this stock next week. So if you're trading this stock, one, I hope you're making money. My suspicion is most people who are trading it are probably losing money because when it gets that speculative, that's what tends to happen. The Nasdaq has a similar trend line here and that rising 20-day moving average. In this market, you can see we came down precisely to the 61.8% retracement of this low to this high right here. And that's where the buyers were found, along with the rising 20-day moving average. So it's still doing what it's supposed to do bullishly. However, we are seeing diminished volume on the rallies. Again, not a reason to sell, definitely not a reason to short, but a reason to be aware and to say, hey, I need to know my levels and say that, from an intermediate term standpoint, if we make a lower high like we have here and then a lower low below the declining 5-day moving average, well, then maybe that's time to move to the sidelines because that could portend a bigger pullback, perhaps down to the 50-day moving average, and then maybe a little undercut of this level. That's the year-to-date anchor. Here's the 50-day moving average. Maybe a touch of the 50-day moving average, bounce back up, and then start to roll over. We don't know. Manage risk the same for each and every individual trade that you're in. That is, listen to the message of the stock on the time frame that you're involved. If you're going to trade a stock like SMCI, you can't trade it on a 10-minute chart, 15-minute chart. You've got to go down to a 2-minute time frame, a 1-minute time frame. That's where you can find the trades in there. So that's, there's a 2-minute chart. And what did we see today? We saw a gap up. It rallied for the first 15, 20 minutes. Then it broke volume weighted average price, and it was lights out from there. Anyways, not to talk about that stock. Everyone else is talking about it already. Wild ride in the Russell 2000. We were, really trending nicely higher here. It was getting stretched to the upside, and then the rug pull on Wednesday. But buyers came back in and rescued it. We closed higher than obviously that low and well above the volume weighted average price from the CPI report. I think that and the 5-day moving average are your key levels for next week. As long as we remain above those, then this bullish scenario on the weekly time frame still looks positive, looks good to me. Here's our anchor from the all-time high in the Russell 2000. We're well above that. Even from the beginning of that move, we're well above it. I see a pattern here of a higher low. This was the prior high. Now we're likely to see a higher high. That's just the way stocks trade and markets trade. What is obvious is where it's likely to go. What's not obvious is the path it takes to get there. That's actually a quote I butchered from Linda Bradford Rashke, which is the path is, or what a stock is likely to do is obvious. The path, though, is what's difficult to look. I butchered it again. Anyways, the point is we've got a lot of volatility, but it's still constructive in the Russell 2000. Semiconductors are getting a little bit tired up here, maybe. And why not? Look at this run they've had from 135 down here up to 205-ish. Here's a trend line in this market. Maybe it pulls back all the way to that trend line. It would be a great pullback, but it wouldn't break the primary trend with a rising 50 and rising 200-day moving average. We're stretched. Be aware of the divergences that are out there. We have a lower high this week, and now we have to look at it and say the 5-day moving average is starting to roll over. Monday, we get rid of this data, meaning even if we trade right in here, that 5-day moving average is going to be declining. But Tuesday, we get rid of this. So, it's going to be a knife fight, I think, early next week. And then we'll see, maybe we're going to get a little bit more of a correction. I wouldn't mind one. In fact, I would welcome one. Be aware of the anchor from this low right here. That's on the daily time frame right here, but we see it with more precision on a 30-minute time frame. So that would bring us down in towards this zone. This was our prior band of resistance. So be aware of all these levels. And again, the most important thing is not to try to pick the top, but to protect the gains you have. Don't let it end badly. Don't be the cliche. Energy names, I did a special video on this on Twitter only on Tuesday, Wednesday, I don't know. And then for subscribers, we looked at a bunch of energy names. Here, let's take a look at oil first. Oil, the crude oil that is right here, you can see that we are back up against this important level. This, let me just move this a little bit higher so you can see the dates. This was the high of last year, and of course we set an anchor to that. Well, this year, our high so far, we ran right up into that volume-weighted average price and then got rejected. We spoke about that here. Let me move myself out of the way so you can see that. We spoke about it was getting extended up in there. We wanted to see a pullback. We got a pullback, which created a higher low. Now we came back in and tested it again. We pulled back, made another little higher low. I think, probably 75 and a quarter. If it breaks back below that, then a breakout attempt won't likely follow through. But right now, you can look at this and see that whether you look at it, and again, I kind of am not very good at drawing on here, but this could be a cup and handle right in here, this being the cup, the handle, that being the cup. This prior support over in here, acting as resistance. The more often any level of resistance is tested, the more likely it is to fail. So I think that oil is looking strong with a stop near 75.25. And that's always the most important part of a plan. Whenever someone talks on Twitter about, hey, I like this or I like that, if they don't say a stop, then it's really kind of useless, in my opinion at least. So let's go back to the XLE, because you can see we're battling with the anchored volume weighted average price from the high last year. And I don't trade oil stocks. I don't even like to trade oil because it's a commodity, but they're definitely looking good. Some of the names we're involved in at Alpha Trends this week: Liberate, LBRT. I think that PXD is worth keeping an eye on, and that one looks a lot almost identical to the XLE. And what I was pointing out in here is this a shoulder, this is a head, and this is a shoulder for those of you like inverted head and shoulders patterns. If that's the case, well then the height of that pattern is 215 up to let's just call it 230. So we'll make that 15 points. That would suggest a move up towards 245 in PXD. OII is another one that looks decent, and let's draw an anchor off of the peak of that. So we're right up against it, and we've gotten extended here a little bit, so maybe it pulls back a little bit early next week and then gets going and then can blast through the anchor from that peak. Anyways, those are a couple names in that sector to keep an eye on. The oil energy names that is. Let's talk Bitcoin and Ethereum for a moment. Here's Bitcoin, and as we know, I've been talking about this pretty much all year. We spoke about the pullback down to the anchor from the run up to the ETF approval. This is the anchor from the ETF approval. We saw that sell off quickly from that level, and then as we broke above it right at this point, well, that's where the rally began. I got fully long here, as I mentioned, I think on Tuesday or so. I sold a third as it was breaking away from that. It broke out and it was at the 50,000 level, so I sold a third. I didn't mind that it will continue to move higher because it is continuing to move higher, and I still have a 2/3 position, but Bitcoin still acts bullish. Nowhere to protect your profits. Same with Ethereum in there. One thing that I was mentioning to Alpha Trend subscribers, if you don't have a crypto account, then you're stuck with these ETFs, and which is better than nothing. But these ETFs, spot ETFs. I know there's a lot of ways to get exposure to, with MSTR, with Coin, with Mara, with Riot, etc. There's a dozen or so good little names, but this is a spot ETF. It mimics the price of Bitcoin. The problem with these ETFs is if you trade them, well then, let's say Bitcoin drops from 52,000, where it is right now, 51,890, to 49,000 during the weekend. Well, that means this is going to gap lower. This trades like, like gold, the way that gold trades. 24-hour markets, they have to adjust for whatever happens during that period. Although gold isn't 24/7, so that makes these even worse to trade, in my opinion. Anyways, I hope you had a good week of trading. Remember, protect your gains. It's your money to lose. Don't let them take it from you if things start turning sideways, but don't fight the momentum meanwhile. Have a good weekend. 3 days.